This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we analyze the previous week market by using technical charts and then try to learn something from it and plan for a better trade for the upcoming week that's starting from June 12, tomorrow, Monday, 2023. So if you're not subscribed, please subscribe straight away. Let's get into the charts. Here we go. There's the weekly charts of the Nifty that you're seeing here. It's an inverted hammer, and we have an inverted hammer right side on the Banknifty weekly charts as well. So inverted hammer indicates the selling pressure from the top for the wick size. That's clearly evident. It also could act as a reversal wick sometimes, but it can be confirmed if the price moves below the candle's low. So it's a bull trap also that has happened last Friday. It trapped the bulls by moving above the previous candle's high and then close below the high. So it's a bear trap on the Nifty primarily. So it's an inverted hammer on the weekly, both which could it's unconfirmed but bearish in nature. But the selling pressure is very much evident from the candlestick's wick size, right? And also daily charts, if you see, that's what we have. We have a wide range bearish candle on the Nifty and also inverted hammer. It's also an inside bar consolidating on the Banknifty on the right side. So it's bearishness on the daily charts as well. The thing is, look at this last 5 days of move. It gave a fake impression of an up move by moving up on the Banknifty for the initial 2 days and then moving down after making a new swing high on the Nifty. So, if you remember that we had made it in fact went last week very close to the previous swing high of 44,500, which happened to the new all-time high on the Banknifty as well. So it trapped the bulls and then made an attempt to move breakout. It didn't happen and then came down. So the consolidation continues for the second week. Previous week also, if you can see that it's a bearish bull trap, and it trapped the bulls once again over this week as well. So 2 weeks of consolidation and continuation of retracement is what we can understand from the charts. It's another view. So we know that the Nifty on the weekly charts is it's a condition zone, it's a breakout zone. It's a very crucial zone. Not yet made the all-time high, but Banknifty has made the all-time high. Still in a crucial zone because there is not a weekly candle above that all-time high. That has not happened. Right? So the previous 2 weeks has been bearish candles of bull traps that is seen, but otherwise momentum is made on the medium term. So we'll see the momentum later. So Bollinger Bands in the daily charts showing there is the beginning of a consolidation on the Nifty and consolidation purely on the Banknifty. So it's sideways indication overall, you can say, but it's having a bullish bias because the price is still above the 20 median. Well, Banknifty has also taken the support of the 20 exponential moving average. So Bollinger Bands indicating sideways beginning of contraction in the Nifty and confirmation of the sideways consolidation in the Banknifty. This is then the view of the charts on the weekly basis, on the daily basis basically. So this is to analyze the support and resistance levels. So the first resistance upside could be 18,600 zone, conquering that back. Then 18,700 zones, precisely 18,696 was the previous high. After 18,790 which is the previous all-time high, and then 18,887, that's all-time high. I'm sorry, 18,790 is not. It's a previous swing high, not an all-time high. So all-time high is 18,887. So that's the resistances there, right? 600, 700, 777, and then 887 all-time high. That's resistance. Downside, you have the 20 exponential moving average, could average support, which is at 18,473. Then 18,450 can be a previous low support. 18,318, 18,202, and 18,169. That's the support downside. And 200 EMA is far away at 17,755. Right. That's what we're seeing. Support resistance on the Banknifty can be seen. The first immediate resistance would be 44,151.80, previous swing high, and then 44,498 is an all-time high. And both the resistance on the upside and downside supports will be 43,862, which is also a 20 exponential moving average. then 43,592, 43,362, and 43,000 nearby zones, 43,92. So it's a 50 exponential moving average. Then it goes to 43,039, 42,733, and 42,305. It's a 100 exponential moving average on the previous swing high, previous swing low, and the budget high zones. 200 EMA is far below at 41,157. Right, that's the support resistance. That's the resistances that we are seeing just now on the Banknifty, and that's the resistance and supports that we are seeing on the Banknifty. Right, so again, all of these correlate that with the open interest levels that we are seeing later, and then try to find where to enter next. Moving on, analyzing the momentum and the trend using the ADX and using the RSI and the ADX indexes. This is the view of the weekly and the monthly on both indices. Left side, you're seeing Nifty's weekly and Nifty's Banknifty's weekly. So you can see that the momentum is intact in the bullish zones on both indices on the high time frame, on the medium term time frame, basically in the weekly time frame. So Nifty, there's trouble for the Banknifty having slipped into the slipped in the sideways zone from the bullish zone slightly. In case of the Banknifty, and Nifty just somehow managed to be on the brim, but it's falling momentum. So in a nutshell, Nifty is having bullish momentum, but it's falling. It's falling in the sideways, almost into the sideways, you can say. And the medium term it's bullish. Banknifty is sideways and falling. It has been sideways last week as well, and it's falling momentum. But in the medium term, it's fine, bullish and rising momentum. So medium term momentum is intact, but there is trouble with the Nifty's short-term momentum. The Banknifty is left to the sideways, and even Nifty is falling. Trend indicator ATX is showing that it's bullishness on the Nifty on the short term and bearishness on the Banknifty on the short term. Right, and we have bullishness that is falling on the Nifty on the short term, and we have bearishness that's falling again on the Banknifty. So weekly basis, you can see that it's DMI positive. It's weekly trend has nothing has happened with G trend and momentum, but short term we have trouble on the Banknifty especially. There's going to be bearish zones on the ADX and momentum sideways zones on the RSI. Right, so that's what the momentum is all about, right? Overall, short term having trouble, you can say. Volatility analysis using the India VIX it's an absolute close flat, 11.12 itself, low volatility regime still, but normally when it's falling below the 11, it gives reverses very sharp. It's still not below the 11. It's mainly with the low volatility. Although the market has taken a pullback for the last 2 weeks, the VIX has not. Nothing has happened. So VIX, market falls and VIX remain flat. VIX is not rising up. Right? That's probably an indication that this deviation could be an indication that the market may bounce up and move up, since the VIX has not really shot up even in the market falling down. Right? So bulls can hope on that. And looking at the open interest chart of the Nifty, you can see that it's a long and winding. Banknifty also long and winding built up as what see on Friday's futures open interest chart. So long and winding is bearish in nature, and longs are getting unwinded in short term. That's what I say. The futures are in the open interest data for June 12th, 2023. The expiry levels can be seen here. We'll come to that. Before that, the put call ratio of the options weekly. The put call ratio is 0.67 and 62 and 0.67. Both are close to the bearishness than the bullishness, right? So open interest high is bearish on futures high, also bearish for the next week. Look in the levels. Look at this. There's triangles on the Banknifty. Right, 44,000 is where the highest put and the call rating both are, people are betting on that 44,000 crucial, although the market is close just below that. So it's going to be crucial next week. So after that, Banknifty 42,500 and 48,000, the second higher put and call ratio support and resistance are seen there. Nifty, you can see that the highest, there's another triangle there, so people the option riders are betting on 18,700. The highest put and call both are seen at 18,700. Just like the Banknifty highest put and calls 44,000, similar to that. And the second highest put and call support resistance is seen at 18,600 and 18,800. Correlate this with the levels that you've seen earlier, the support resistance charts, and then you could get to know where to enter and where the support resistances are. Yeah. Right. So, right, it's open interest choice levels are indicating that it's a very tight range. Anything could happen. Next week we have the Fed policy event also coming, right? So option writers, for some reason, thinking that it could be positive. Otherwise, they would have gone for a wider range
It does not happen. It's very close, narrow range. It might change the next week beginning, but that's what is option that is showing as of now. Moving ahead, let's analyze and see how the industry sectors watch. So industry sectors performed last week. So the one thing that you can notice is the IT sector alone went down big time. IT sector went 3.25% down, and it's sideways momentum in this. Let's fall into the sideways from the bullish momentum in the short term, and the weekly also made in sideways. So stay away from the IT sector for some now until some confirmation comes in from both time frames. But otherwise, if you see the metal is up, auto is up, pharma is slightly down, but it's it's flat. FMCG also slightly down, but it's just 1% or 1.25%, and reality is up actually. Right, so reality is up, and auto is up, and metal is also up. And most of these sectors other than the IT is maintaining the bullishness in the short term. All of them, metal, auto, pharma, FMCG, reality, all of them maintaining the short term bullishness, although the weekly momentum has to catch up. So nothing much has happened that bad last week, no, although it has turned out we giving pullback, bearish retracement and all that, but across the sector, IT had taken a beat last week. Otherwise, things looks fine. That's what you can understand. Look at this. IT sector was moving up and fell prey to the resistance, and momentum also has taken a dip back. Down metal is trying to bounce up and send sideways, but it's rising up. Auto sector, we can see that it was already breaking out and continued small pullback came after the breakout. Pharma sector is showing that it's at a resistance zone at the momentum. It is moving up. It is trying to break out, but finally ended up with a resistance. FMCG is also facing resistance, although it's an overbought trend in the other side. It's above 80. It's extreme bullishness is what was seen. Small pullback has happened, but remains in the bullish zones. Reality also breaking out of a major resistance zone and then small pullback. Momentum is clearly bullish. So absolutely, all except the IT sector, other sectors are rising up momentum is what you can see. Not big harms have happened. That's a small pullback seen in the auto and the FMCG future at all-time high, breaking out kind of levels. Anyway, now these are the index heavyweights that contribute maximum to the indices. HDFC and HDFC Bank, HDFC Bank here, and has extended the consolidation basically. Sideways momentum, moving all over the place in the bear zones is what is happening. So not much hope on that for the time being unless the all-time highs are taken out. HDFC also is doing the consolidation, extending that consolidation and moving the sideways momentum. Reliance has bounced up well, but overall in the last several months, or probably last 1 or 2 years, it's just consolidating in a narrow range. That's what it's doing. So sideways, maintaining the sideways momentum. So two major giants, HDFC twins and Reliance in the sideways. Infosys was in the had climbed into the bullish zones, but slipped back to the bearish zones. The concern sideways momentum. TCS is also showing a bearish candle. Of course, the IT sector was got hit, but falling back in the bearish zones is disappointing for the Infosys. So, not sure what has happened. There is some EPAM related guidance review in the US market. This was probably about, even the Nasdaq was flattish close. Slightly down, I think, Nasdaq last week, but not big. No big down moves has happened, but the impact of the news has hit badly on all stocks, IT stocks. IT was recovering; it was on the way of recovering, but got hit back. ICICI Bank was in the brim of a breakout. It was in an all-time high, rounding pattern breakout. That's where it felt resistance and continues to face resistance for the last 3 weeks. One was still bullish, taking a support. Any bounce from here could be terrific breakout because it's a range shift, momentum range shift. If you're not aware of range shift, check the playlist for the technical analysis playlist. No, another stock Kodak Bank which had taken out the resistance but hit the resistance and then continued to fall the last 2 weeks and now has slipped back from the bullish zones in the. So this industry's the major heavyweight stocks contributor has got hit really bad. None of them are definitely bullish except the ICC Bank, which is also can fall down any time kind of zone at the top crucial resistance zone. But otherwise, you look at this. Kodak was falling down. ICC Bank is at resistance. IT stocks are in trouble. HDFC is maintaining the sideways. Reliance also maintaining the sideways. So industry heavyweights that contribute maximum to the index. So that what is it? So they have been hit bad and they're not going to be response, but they're just not breaking out and making big moves. So, but still the market is moving up. That means there's a lot of movement in the non-heavyweights. The buying is happening in the non-heavyweights. So that's one way good. The market's breadth is expanding and more non-heavyweight. We're talking about only the 7 heavyweights. There are not many in the Nifty. Right? So that's where the buying is happening. Is what we have to assume. The market is not falling big. Neither is the heavyweights rising up. So some kind of buying is happening in the other non-heavyweights. Is the conclusion, right? But for the market to really break out, money has to come in and flow into these heavyweights, which contribute maximum in the index, right? If breakout is required, a couple of these 8 stocks has to move. Demonstration participation, if you see it's a buying cross, net buying is what you're seeing for the Fyers and DIS last week. 970 crores of Fyers continue to several weeks. It's more continue to maintain the buying mode. The institutional support is there. DIS is also buying last week. So the net derivative moves in the Friday are also moved up actually. So institutional participation, being there is very good for the market, and that gives hope for the bulls. Let's now look at the global markets and the global commodities and the currencies as well. Starting with the currencies, dollar index is 0.45% down after having broken out of the cup and handle pattern. Seems to be taking a support at that 103.55 nearby zones. And momentum is sideways, right? The USD/INR currency pair has closed flat actually, right? 82.4. It's maintaining absolutely the same. Remember, it's not too far from the all-time high 83.5 kind of levels, and it's in a ascending wedge. Anything would happen as it closes towards the end of the wedge. It could either break out or break down. So be cautious on this fact. It's closing, it's narrowing. It's neither breaking down. It's narrowing in a narrow ascending wedge. Right? Be cautious on that. Right? But rupee remains to the weak zone is what you can understand. As long as it remains at the 82 above levels or 80 above levels. So currency is not very encouraging for the market. Crude oil is 2% down, is good. It's at the 70 levels, and then it's a relief. Gold is spiking up slightly, 0.67, very slightly. Remember, let's look at the crude first, right? So crude, you can see that's what it is, below the median, falling down in the barrel channel since a long time. Mainly the sideways movement. Gold coming back there. So it was falling down after hitting the resistance for the 3rd time in the last 2 years. Attempting to break out the 2075 kind of levels, which never happened for the 3rd time, and it was falling down, but it's not ready to go further down to the bottom of the channel before it's attempting to stay there and then try another time. Is what it looks like. But anyway, momentum of the gold is in the sideways. So just to wrap up, currency is not giving much hope as the USD/INR is still at the weakest, still rising up and very close to a resistance zone, but it remains to be weak. The rupee remains to be weak. It's not that great news. Crude oil falling down is good, but good for some non-oil, good for the economy, but overall may not be good for the oil marketing companies and all that. But yeah. And that's a summary. The gold is actually not ready to fall down, but still to the sideways and trying to hit another time to break out. That's what the summary of all the commodities in the global currency market.
Why do we need to see this? Is macroeconomics and all these commodities and gold and currency has impact on how the market moves, right? Indirectly, right? I'm not getting the details of the economics there, but there are correlations that moves and the market moves, right? So another market, another sector that we analyze is the global markets, and especially the US markets, the mother market, right? So US markets close flat green, you can say. So the Dow Jones and the S&P 500 has moved up, but slightly less than half a percent, 0.34 and 0.45 is the move in the S&P 500 and the Dow Jones. But Nasdaq was flat is negative, slightly negative, but that's what I see here. Left side is the Dow Jones, remember it's in a descending wedge and about a breakout, showing some green finally, but momentum is yet to catch up and get into the bullish zones, yet on the Nasdaq, but yet on the Dow Jones, sorry. Top you are seeing Nasdaq, US 100 is in Nasdaq, and then you are seeing indices close very flattish close. Actually, it has broken out of the descending wedge and then showing momentum, and it's in the bullish zones actually, right? Unlike the two, unlike the Dow Jones. S&P 500 also is following the Nasdaq. It's US 500, the broader market index. Dow Jones is just like the Nifty 50. Nasdaq is like the tech index, and S&P is a broader 500 index, Standard & Poor's. So it's breaking out and then showing green, and the momentum is also bullish. So bullish momentum for Nasdaq and S&P 500, and then Dow Jones is starting to climb there, but all of them seems to be attempting to break out and showing a flattish green close for the last week. Is what you can understand. That's it. That's about the global markets, currencies, and commodities. Let's move it to actionables for the next week. The stock picks 2-1. Axis Bank. It's having a decent volume. It's a weekly chart we're seeing. It could probably be breaking out of the consolidation, rectangular consolidation, following rounding patterns of multiple. It could be big moves and can go up to the thousands. Have a tight stop loss. Momentum is extremely bullish and trend is also bullish. Look at the way it's straight up, right? RSI and ADX is mega bullish. So Axis Bank breaking out of consolidation and shorts and trail options coming. NTP is in a panel channel and it's breaking out of some consolidation rounding pattern. You can clearly be seen decent volumes are there. Momentum is bullish, trend is also bullish, and it could go up to the channel top, right? For swing trade opportunities that could action from few weeks to few weeks. Have tight stop loss. That's shown in the diagram. So two swing options, NTPC and Axis Bank, both long calls. Another one is the payoff on the Nifty weekly options strategies. Basically, this is nothing but a calendar spread. It can be it's basically a bear put. It's a bull put. It's a bull put spread that you're seeing. So so it indicates I'm bearish, but not that bearish, not heavily bearish, but I'm bearish. So if price falls down big time, then I'm going to lose much. I'm still in green, but if no, but at the same time, I'm assuming that price won't move over 18,777. So very good range from this, very safe. And the difference between this bear, this particular spread and counter spread is that it's still a bull put, but still it's a counter because I'm buying the far weak, as one of the legs. Right? Not this current week, but the far week. That's 22nd June's weekly call is what I'm buying, and 18,700 coming weeks, 15 June weeks call is what I'm selling. I'm selling both calls, so it's a spread. Only 2 legs, unlike what we normally have 4 legs. It's only 2 legs. Very low margin requirements, low risk. Risk-reward ratio is okay, but except before the expiry because it's a calendar spread. Right? If the VIX is spiking from the 11 plus, it could be beneficial. And if the market is falling down, you're safe. You don't lose much. In fact, you may still manage to gain as well. Right? But except before the expiry day, 1 day before that, right? No matter what it is. Right? Profit may not be that great, but 1% to 2% you should be happy.
Yeah, capital size is as per you can resist for one lot. You can have as many lots as your capital and risk management strategies. Right. Having seen all that, let's just wrap up. So, in short, market is just retraced again, consolidating now. No, after tracking the bulls once again, second week, right? So it's an ongoing rally of 11 to 15% indices from the pre-swing low. You know that, and still having a rounding pattern and crucial breakouts, and from there market could fly. Right, remember that it's having good supports. Previous breakouts on still there down, right, and supportive trend line, moving average, everything is intact. Only when the trend is still hanging on the bullishness in the weekly charts, if you see, Bollinger Bands is consolidating for sure, but it's not bearish or breaking down. It's not expanding on the downside, neither is expanding the upside. Fyers and DIs are net buying, maintaining not big buying but net maintaining 1,000 crore kind of buying on a week to week basis. Major sectors remain bullish. Only the IT has got hit last week. And probably if a bounce from the support is there, moving average supports and previous string supports and rounding parent supports, breakout zone supports, all that is there. VIX is remaining low, even when the market is slightly pulled back. That's also positive. The US markets, the flat is green. It's actually trying to break out, and although Dow Jones is catching up, it's still a flat close, green close basically. So the market view for the next week is sideways view or a neutral view, you can say, with a mild bearish bias to that, you can say. Right? Because the pullback could extend to go back to 18,400 or move to the 43,500 kind of, and then take a support there and then move up. Right? So Banknifty has lost the momentum and the trend. Both makes it as absurd sideways consolidation in a sense. It is more weaker than Nifty basically. We already seen that in the charts, and it has trapped the bulls. And it is closed below the 44 key resistance level. It's all triangles in the upper interest that we have seen that the OI data is showing that it is triangles 44,000 and 18,700 is what people think for both indices levels, both put writers and some very narrow triangles is what's seen, and we have a Fed event also next week. So there is a narrow ascending wedge. There is inside bar consolidation. Consolidation would expand to a bearish down move. It's at a resistance zone, major resistance zone on a weekly charts also, breakout zone. So consolidation is evident. So a lot of these factors are in favor of the bears. The Russian fears hike, inflation rate hikes, and all these things are not are still there. Although the VIX is remaining below the 20, far away to the 11 at the 11 levels. Still, uncertainties are there. So be cautious about that. Crude oil is fine, but rupees remains to be weak, and dollar could break out any soon, anytime. So these are all uncertainties. You have to be aware of that. So the next week it could be 18,400 to 18,800 Nifty, and 43,300 and 44,500 for the bank. Median from 16,650 pre-swing low and 36,800 on the lower side, 18,500 and 44,000 on the upside. If that is maintained, then markets can move up. Okay. So as I always say, have hedge strategies for trading so that your capital is protected, and always manage your risk properly. So VIX is spiking up, and then have tight stop losses. All this I repeat every week. And also this option strategies can be used for investing also. By whenever market is pulling back, you can use it for having rental incomes by covered calls and cash get puts. See the checklist for the videos on those. Right. So I'll save and protect your capital and play it safe. So in a nutshell, just a brief. Market is retraced for the second week. It is having a reversal week. There is a possibility to pull back. How long the pullback would extend? Would that end up as a consolidation instead of breakdown? We never know, right? So there is a possibility of anything to happen, but have tight stop loss and have strategies hedged, and roll on, roll up if you have options that are non-directional. Right. So that's my view. Mild, bearish, biased. Side neutral view is what I have for the next week. Right. Levels are all mentioned there, and my view. It's not a recommendation. It's my view. It could go wrong, and regardless of that, if this analysis has helped you to frame your own view in some way, please hit the like button, then share to your friends and colleagues. We have very few questions and appreciate help in out. Subscribe if you have not done that, and share to your friends and colleagues. Put in your feedback,
And if you want to avail the Telegram services, click on the link that's given in the description. Thanks for watching. Happy trading, happy learning. Bye bye.